Hello traders, Gary Wagner here, approximately 10:45 in Honolulu. It is Monday the 17th day of October and this is the daily report for gold. We do have the precious metals complex after trading higher most of the evening in overseas trading, currently trading off with gold off about $8, currently trading at 1676.60. That is the December contract, spot at 1670.17. The interesting thing is the fundamental news that really precipitated this fall from the highs last night was a statement that was made by Germany. And Germany dampened expectations for a fast resolution to Europe's debt crisis. That, of course, created a run to the dollar, let's say. But what I find interesting is this. For those that are holding long positions in the precious metals market, specifically gold, I don't think that they're going to be trading that in for dollars. If you do have a investment portfolio which contains euro dollars, I can see switching that to US dollars. That being said, I think that any kind of selling pressure that is on the precious metals will be short term at best based on this fundamental news that's sitting in the market. Now, the first chart that I do want to look at, this is going to be our daily chart. It is December contract. It is in Henkin format. As you can see, even with the down day, the Henkin charts react a little bit differently and are drawn differently because they do take into account the data from the previous trading session. It is still sitting green. Our MACD is still sitting in terms of widening, though you can see it's about the same, but it has not widened. And traders, this of course is the dollar index. And as you can see on the dollar index, you can see this move up today. And this is really what has been putting pressure on the precious metals markets as well as the equities markets. The equities markets are definitely under pressure. And traders, we are looking at the Standard & Poor's 500. This is a daily chart, and you can see it is trading near the lows of the day, and as it opened, it never looked back. In other words, it has the open as the high. After seeing this nice type of appreciation that we saw last week, this type of news, it doesn't surprise me to see the market under pressure with such news out. You know, traders, it's still obviously very early in the week, being Monday. We've just had a little bit of trading in the marketplace itself. You can see this on a weekly chart. And my belief is that we're still probably going to look at this 1724, although this has dampened it. And so my question is, when we take a look at the way this market might get there, and again, this is a weekly chart, might we see something like this? And in fact, if that's what we're going to see, might the prudent call be to pull profits in this area? Because realize we are in at about 40. It's sitting at about 76 right now. We've got about $36 profit. So it might be wise at this point to peel some profits off of the table. If you have a position that's multiple contracts, you might, I would recommend, pulling profits on a third of the portfolio in gold. And traders, when we look at our daily chart, you can see where this particular resistance has come in again at. And that, of course, is that 1680 area. We've talked about this before. It's been a major level of resistance. You can also see that as this market has attempted on multiple times to take it out, it has been unable to. And for that reason, we are seeing the market really trade in this narrow band at this point, as you can see, just below this resistance area. And that's another reason those who have multiple positions, meaning multiple contracts, should consider peeling some off and taking some profits here. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.